Yo, Cynthia in the building. I spoke last month in Fort Worth. Where were you? It's the 1RE Club, the RIA called the 1RE Club in Fort Worth. I spoke there. How far away are you from the Botanical Gardens in Fort Worth? Beautiful place.
Yeah.
Beautiful place. It was late and it was stormy, but I could tell it was beautiful normally. Oh, we got Jesse in the building, not paying attention as usual.
Sorry.
I'll go ahead and let somebody in. He never sees
I was in the Botanical Gardens from the moment that you said. I was thinking about the water features. And
all right.
I'm sorry.
All good.
What's up, Bridget?
So, welcome to everybody here. We talk through the infinite banking concept on these weekly experiences. The Banking Bros channel on TikTok, YouTube, our family out there, welcome to the Cash Compound channel, and our Zoom audience who gets to see all of the goods when we decide we are going to show you some new stuff. I might even bring... I wish I had already gotten there or had dual screens because, Jesse, yesterday I was in the monthly Nelson Nash practitioner Zoom environment for practitioners, and one of them, Richard Canfield, you probably know of Richard, and up there in Canada, he was killing it with a great new visual. I got to show you before we leave today. But okay, what's up? Cynthia, you're about 30 minutes from that area. Okay, very good. Well, is it your first time here? Put a 1 in the chat, ladies and gentlemen, if you're ready to talk about your life and money, and double tap on the screen if you like, love, or learn anything on this experience. The 3-cup setup is on the table, helping us understand how to save and spend money at the exact same time. Why don't you see if we can get a shout and a response? I'm not wearing headphones right now from Bridget. She out there? She needs.
I tried to say, hey, Bridget, feel free to try to unmute yourself if you're in a place where you can. We love to be able to cater to our Zoom call where we can share screens and stuff. Otherwise, feel free to put a question at us in the chat. Let us know where you're at in your process, what relevant questions you have. Love to hear from you.
All right, ladies and gentlemen, we always get lots of love from our TikTok audience out there. So if you have questions, comments, or concerns, put them in the chat right now. And I'm going to help you understand what these cups, what are these glasses doing on the table, and why I'm holding so much cash. We like to explain the infinite banking concept as the save and spend system. This visual right here, our 3-cup setup, is what's up out there on Zoom, is one of the simplest ways to understand the product for the process. Okay, this is the ideal asset. It is a whole life insurance policy, Jesse.
Yep, properly structured.
Properly structured. What does that mean? Whole life insurance, we probably understand. Isn't that the kind that's super expensive and lasts forever?
It means you first need to talk with somebody who actually uses it to save and spend money.
Okay, properly structured means that it's going to be designed differently than Jake at State Farm would do it for you, so we can get to the leveraging power. Cash value, cup number 2, right here in the middle, and I'm going to show you how it all works. Well, Jesse, why don't you do it? Let's put some money in the game. Ladies and gentlemen, when we take our income, any amount of money that we make, and we decide to give it to an insurance company, we are paying premium. Premium is the red cup. All right, everybody, put a 1 in the chat if this is your first time learning of this, okay? Let us know. Do you want to walk through this? Do you want to understand the save and spend system? Putting a 1 in the chat right now lets me know that you understand. Hey, got it. I'm with you. I want to learn. Okay, if we say something you like, love, or learn, go ahead and double tap as well. Premium, that's the red cup, cup 1. When we give an insurance company money, that's called we bought the bill. We bought something from them. That's premium. Now, in whole life insurance, Jesse, in car insurance, Bridget, you be careful, ma'am. Out here putting a 1.
Driving.
You just drive. We got you, Bridget. We got you. Don't be typing stuff. All right, you're driving. That's not green screen. We got green screen. You're driving. You're really driving. Okay. So when we give an insurance company premium, what does it buy, Jesse?
It buys you a guaranteed death benefit.
Now, that's whole life insurance.
Yes.
But when you give a insurance company money and premium and it's for car insurance, what does it buy?
Oh, protection. It buys you coverage.
Protection. I love it. Very good. Okay. And in whole life insurance, you gave us a couple of qualifiers on this death benefit. What were they again?
There could be a few. It'll be tax-free, of course, when it's paid out. It's also called coverage. It's called protection. It's guaranteed.
Guaranteed. I love it. So when does it expire exactly? Because I'm trying to figure this out.
So you have the policy for your whole life. And when you go, because it's when, not if, right? With life, when you go, tax-free, guaranteed to your heirs or beneficiaries.
Oh, what's up, content baser? I don't think it's content baser because he's not content at all from that actual. Right there. People actually watching too. We've been helping so many people save and spend money at the exact same time. You can just do it with life insurance. If you don't want to be here, my suggestion is don't keep typing. They're going to show you me again. This face is going to show up in your algorithm. If you buy whole life insurance, that death benefit is guaranteed, like Jesse said. It must pay out. It'll come when you die, not if. You got to die sooner or later because it is guaranteed. Must pay out. The magic happens right here for you while living. Cash value. Cup number 2 is the equity you've got in the insurance company's big pool of money they built for you. They built it because you gave them premium. It buys death benefit, must pay out, and cash value is the liquidity of it. Does that make sense? Double tap on the screen if you're understanding now. Now watch me, Jesse. I can use, lose, or abuse these dollars.
Sure.
Because my money is still safe, guaranteeing me a policy. I am now leveraging the pool of money my money has created. I'm leveraging it. You guys understand what the words that are coming out of my mouth? Jesse, you remember that one? What was that one?
I do, but I can't come up with a title right now.
Who knows out there? Help Jesse out. He was born in the woods. He still lives there.
Me and my brothers would say that line to each other, but I'm drawing a blank on the movie that it did come from.
All right. The difference. Do you get both when you die? Now, remember, I love it. Rush Hour. The difference. Got it.
Oh,
Rush
thank
Hour.
you.
Rush Tucker, baby.
Yeah, but,
Okay.
but which one? One,
Okay.
2, 3.
I don't remember which one.
Makes
Okay.
me think of the bloopers. Somebody will die and they'll say, well, he won't be in Rush Hour 3.
There you go. Yeah, there was a Rush Hour 3. Okay, a couple of questions for you out there. We got to answer. Is this whole life insurance? Yes, it's the kind that does not expire, does not term out. You're not renting it, you've bought it. The death benefit is guaranteed to come out. Cash value is simply the equity so far. You got it? It's how much of that death benefit we can get to without being dead. Okay? Cash value is a portion of the death benefit. People ask all the time. I saw it right there. It's the first one. Okay, they're saying it's the first Rush Hour. Cash value is not a separate extra pool. It's how much equity you have in the big pool. If you got it, say I got it in the chat. Every one of you out there there's 3 of you who are going to type got it right now, you still don't have it. Listen to me. I already know this is how this works.
But we appreciate your participation.
Yeah, we appreciate your participation, right? Cash value is how much of the death benefit you could get to. So when you die, not if, this is the face amount, the whole thing. So it's not an extra pool. It's a portion of equity from the pool. You guys got you? You guys got me? I got you. What's up, Steven? Appreciate you being here. Bridget, do you think? Okay.
Yeah, she's listening in.
Okay.
That's a good follow-up question right there.
If you don't pay cash value back, they recover from the death benefit. So cash value is a loan against the future death benefit. You have all the time in the world till you die to pay it back if you like. We suggest that. We do suggest it, becoming your own good, honest banker. But if you don't, which is fine. I plan to die with outstanding loans because my need for finance is a bigger need than my death benefit.
Yep.
I plan to die with loans out. And yes, it is a lien against your death benefit because it already came out. They'll pay your family the rest. How's that for a visual? Is that helpful? Let us know. Cash value loans outstanding subtract from the death benefit because these are prepayments of the death benefit. Okay? If you don't pay them back, it's just a prepayment of the death benefit. They still
got
owe
to it
you
early.
money. Yeah, you just got to it to go to Disney World and die on Space Mountain, whatever you did to die. Perfect. Cash value grows at a fixed interest rate. Great questions from the difference. Jesse, take that one. Perfect. Cash value grows.
Stop there. Yeah, the first part. Yes, with these types of policies, when they've been properly structured with good companies, okay, mutual life insurance companies, they're going to grow. You could put a period there, which is fantastic because today they're bigger than yesterday. Tomorrow, it's not here yet, but the cash value is going to be greater than it was today, which is beautiful. But then the second part about the interest rate and whether it's fixed is look at it like this. Here's what I say, big picture. The number of the cash value must eventually equal the death benefit amount. So the longer this system is in place, the bigger the numbers get, period, right? Like that's just my big picture answer to you, right? Like it must go up and it must eventually equal the greatest number, which is the death benefit amount. The cash value must eventually equal that number. And everybody's numbers will be different because we custom build policies. But that's good news that it must eventually be that number. Now, is it fixed? Yeah. So when we custom build a policy, one of our steps in our process is to have a Zoom call. We do a face-to-face. We go through your policy that's been built for you, and you see by contract what that rate of growth is on the policy if you don't touch it. Now, that's not what we encourage you to do. We actually encourage you to use the policy, because if you use the policy, then those numbers are way too small.
There you go. Very good. More questions. I love how fast they come in. I still don't understand money, but I'm trying the best to. Hey, we've got a full video for our friends out there who are watching us. Go ahead and follow the Banking Bros if you're learning about how you can save and spend money at the same time. And we have a full presentation with that name on it. Click the link in the bio. Go there. Let me show it to you so you can find it. And we're going to help you. Also, somebody else out there said, hey, I'm 40. It's so expensive if I want whole life insurance. I'm 40. I pay way more than I have to because I'm building a banking system and I like deposits, baby. So I understand where you're coming from, but that mindset might need to shift to deposits rather than a bill. Every dollar I place inside premium, Red Cup 1, of whole life insurance from this specially designed policy here at the mutual company, it guarantees growth on it, Jesse was just explaining. I get a separate pool of growing income tax-free money to use forever. And my money keeps earning while I took out loans to go buy stuff and do stuff and go places and see people. My money, every dollar you put into premium, compounds and grows forever. How much of your money do you want to put in that environment?
I made a premium payment earlier today. These are my favorite calls, money-wise. These are my favorite calls all year long when I can pay. And today we paid extra into one of our policies, actually. So
love it.
We want to fit in as much as we can.
Very good. Okay, so we've got somebody here on the Zoom experience, so we're going to let her. You have questions for us.
At least we're parked now. We're parked.
Right.
Yeah.
Yes, you're safe. You're safe. You're sound. You're at home. You're comfortable. And shout out to our YouTube family out there on the Cash Compound. You can find lots of resources. If you click the link in the bio, that's what I was showing you. There's a link right here in the middle of the page. I can't do it with this hand.
All right, Bridget, let me know if you have any questions. Let me know where you're at in your process. Are you learning about this idea? Are you already a client? How are you using your policy? Just let me know if you have a question. Feel free to unmute or put it in the chat, either one.
Yes, we're here to help you. I'm not wearing anything, so you'll have to talk to
I can hear you.
What's up? Tony Shaver's in the building. Let's go. Tony, the author. He's a great follow. He's a great client. Listen to him. He knows what's going on in here. We appreciate him. You know, Tony Shavers is Miss Robin's nephew.
Yep.
Yeah.
Yep. He's real active in our Facebook group.
Love it. We have a Facebook group. That's right, Jesse. Go ahead and what's it called? Tell everybody.
Infinite Bankers. And he's always sharing nuts and bolts in there. Big encourager in the community. Love hearing from him.
Okay, somebody asked, what company has the best policies for this? Well, there isn't one. It's the type of company we're looking for and the style of policy setup. So if you don't live in the right state or your measurements at 36, 24, 36, then maybe you can't use X or YZ company. Do you see what I'm saying? Ladies and gentlemen, the three things we're looking for, what is that reference? 36, 24, 36? Bridget knows. Tell him, Bridget.
I don't know.
Only if she 5'3". Did she just say that?
I didn't hear her say it yet.
Well,
I think
muted.
she's laughing again or something.
Okay, very good.
It means nothing to me. So, it's lost on me.
Yeah, I believe that. Bridget, he trying with this guy. Okay, so ladies and gentlemen, the types of companies are what's important. Number one, the type of company is a mutual insurance company. Annually, mutual insurance companies have the ability to declare profits as dividends to policy owners. That's me and you. Number two, what are we buying from this company?
Policy.
What
Death
type
benefit.
of policy?
Whole life, guaranteed.
Love it. You see that popped up? Whole life insurance. And number three, we're setting it up for cash value on purpose. Okay, it's the type of company, not a company. The difference, when would you recommend whole life rather than IUL? 99% of the time, first off. So the difference, did you just hear me? When would I recommend whole life rather than IUL? 99% of the time. And the reason for that is the guarantees. The guarantees. Some of those guarantees are the cost of the insurance. The cost of the insurance does not rise. in whole life, and it's guaranteed to compound and grow. You do not have either of those guarantees in IUL. So because of that, we have no idea if we'll have cash value for the rest of our whole life. We'll have no idea how much it'll be in an IUL. We do not recommend utilizing indexed universal life for the infinite banking process.
Nope.
Okay, Mindy Landers, what's up, YouTube? Mindy is on our team, and she's monitoring the YouTube. We might have to make her like an admin out there if she wants to help people and
So
answer
I guess
questions.
you're laughing about her comment because her comment is the answer about what you were asking me. 36,
It is
24.
incorrect.
No? Okay.
Incorrect.
All right. I don't know.
All right, Bridget knows. 36, 24, 36. If I say that, those are the measurements that Sir Mix-a-Lot says in Baby Got Back. That's
right.
what it is. Okay. Alfonso on YouTube, what's up? Do you get paid every month when I pay monthly premiums? Great, or pay monthly payments? Yes, ladies and gentlemen, insurance is a commissionable good. So every time you go to the grocery store, someone gets paid too. And I hope you go more than monthly. You can't make it these days. If you're eating fresh food, you cannot go monthly. You have to go every week. So yes, life insurance is a commissionable product, and depending on what you buy and how it's set up determines several factors about the commission structure. Did you know that in the whole life insurance built for infinite banking, where there's cash value for you immediately? How fast is immediately again?
30 days.
Within the first month, there'll be cash value there. Did you know, Alfonso, that the commission has to lower because we built in change for you? If there's money that you can use, it obviously
No,
cannot
Dave
be
Ramsey wouldn't have
commissioned.
told them that.
Yeah, it can't be commissioned. So the types of policies we build, I'm not saying that I'm the most saintly person on the planet, but I am saying that if you buy whole life insurance from Jake at State Farm, the commission's higher because he doesn't build any cash value for you, so you can't utilize the money. User 256 says, how long do deposits have to stay in before you can borrow? Deposits are always going to stay in, baby. There's a guaranteed growth on them. So we're not going to withdraw them. I'm not.
We don't want to interrupt that part.
So we're going to take cash value loans against our policy through this cash value cup. This is the amount you can take right here. Okay, whatever's in here, and they're available right away. We just mentioned that. Hopefully you got it. Okay, you guys learning, liking, loving anything? Double tap on the screen out there.
I think I saw a question there asking about, do whole life insurance policies have level premiums? The answer is yes to that one. If I saw that question right, yes. This is the kind of policy where you pick your number. We don't tell you your number. You pick your number, you fund your policy at that level amount of premium, and it'll never go up. Now, we build them in a way where you can pay extra when you want to because we're trying to fund this, of course. But the guaranteed scheduled ongoing premiums will not go up.
Okay, the difference. Give me a better question for that because you've been asking some good ones, but I don't understand that one. Guideline level premiums? What do
That's
you mean
what
by
I thought
that?
I saw the word was.
Yeah, what do you mean by that? Make sure I understand what you're asking exactly. Okay, we've got Alfonso. Thank you for being honest. Yeah,
Of course.
Alfonso, if you go to work, hopefully they pay you too, man.
Yep. At the end of the
So-
day, big picture, I would say the consumer pays for everything, right? Like Nash
The
in his
consumer
book talks-
always
right.
pays for everything. So if the prices go up or the costs go up or the transit support goes up, the customer has to pay for it. Yes, there's always going to be someone gets paid. Like that's not a bad concept or a foreign concept to anybody. Someone
No.
has to get paid. Yes, but remember, in the whole life insurance, your dollars continue to compound and grow. If you give your dollars to Bank of America, Wells Fargo, Chase, Citibank, and USAA, someone's going to get paid. They're going to leverage your dollars and loan them out for credit cards and auto loans and things like that. Right, Bridget?
Mm-hmm.
You got loans out, don't you? You've taken loans
Yes.
from the bank before. Yes. Okay. Our
Yes.
money, my money, Jesse's money, and your money all went to the bank and got deposited in, didn't it? And then the bank
Yes.
leveraged those dollars and fractionalized it. They're unethical. And they loaned it out to everybody in town. And now we owe them all the money back plus interest. So the bank got paid too, but what did you get at the bank? The only thing you got from the bank was security and a debit card. If you give your money to a life insurance company, you get guaranteed growth and cash flow. You get uninterrupted, constant compounding. You get a separate pool to use, and that's why it's tax-free, coming from life insurance, there's no income involved. So let's not be worried about someone getting paid and that therefore makes something evil. You'd have to stop shopping. Okay?
Which is not happening.
Yeah, you'd have to stop. Someone is going to get paid, but in the types of policies we are designing on purpose for infinite banking, we actually have to lower our commission from a regularly styled policy. Okay.
Wow.
See one there about medical questions.
Okay, but what if you have cancer or medical? Then would it be graded? We just got a policy started from someone this afternoon, 10 minutes before I got on. I was telling Jesse about it, and that one is graded. They still have cash value. We're still using it. This lady in Texas, has got to use the body she has. And if her body was not going to qualify, no problem. She has a son, and she also got a policy on him. So she could be denied completely, right? She has cancer in her history. She has some sort of criminal record the insurance company may not like. She has too many DUIs. That's another thing insurance companies don't like very much, right? Because they're trying to assess risk. So if you've had driving issues that are DUI related, they may not like you very much. But that doesn't mean she can't do this process because she has a son. She can put the money on his body. They won't ask her any questions. And then we can move forward with banking. So hopefully that made sense, Mark. Let me know. Double tap on the screen. Give me a heart and like. And remember, let me shout out again. If you want to watch our full presentation, go click the Banking Bros. Click that twice, I think, that white circle. You can share right about there, okay? Right about here on your screen, there's the share. We'd appreciate if you sent it to somebody. And then go click the link in the middle. Right here, it says Save and Spend System right in the middle there. Oh, there it is. I think I clicked it. And you can watch our 55-minute video presentation and to get on Jesse's calendar. Jesse, you taking calls this week? You helping people?
I am. Been on the phone today with folks in Kansas, folks in North Carolina, a few different places.
Love it. Love it. Yeah, me, Texas today so far. South Carolina, where I live. We're speaking at a CREA meeting, a Real Estate Investors Association meeting in June or July. My brother and I will double team that one. He's speaking in Philadelphia. Anybody in Philly, in greater Philly area, Jonah can probably get you in on Saturday. Okay, so he's leaving tomorrow for that. If you're in Philly, DM us right now, and we'll see if we can get you in to see our live presentation somewhere in Philadelphia Saturday. Okay, did you ever answer Bridget's, or are you going to ignore everybody still like you always do?
I think we were already talking about something else that you were explaining. Ms. Bridget, what were you asking about? Can you draw from the fastest? Was that how soon can you
Which policy?
Which kind of a policy?
Yes.
Yep. So we use whole life insurance. That's what we use. And then we build it based off of conversations that we would take one-on-one to fund it at the level that you would want to fund it at. Make sense? So everybody's different. Everybody's finances are different. But that's what we use as a whole life insurance policy because it's guaranteed, like we were just saying, to grow and to cash flow.
Okay. So all the types of policies we set up was also what he's saying. We only set up whole life insurance for the purpose of immediate cash to be drawn, to be used for debt payoff, for car financing, for, hey, we going to go to the beach, whatever you want to do. So money doesn't care, but it'll be there. I rhymed that one, so that means I'm done. Okay, here we go. Martin, how much commission do you make for signing people up for life insurance? That depends. I make a little bit different than Jesse. I also pay myself different from Jesse. The insurance company pays me a little bit different from Jesse. So that's a tough question to answer. But remember, the types of policies we talk about designing for ourselves, I own them, he owns them, and we help people get them. We have to lower our commission on purpose from the regularly scheduled way to do it. Anyway, but that's kind of a complicated question. If you're interested in that question because you really need to know some detail for reasons that I would not know, I will be happy to entertain them on a phone call, one-on-one.
We can be an open book in that way.
Right. Like Michelle says, the commission you make on life insurance depends on the carrier. There's 10 different variables here. And Michelle's right. Okay. Why does commission matter? Right. So remember,
That's what I say. If I get what I want when I show up at a restaurant, it costs what it costs. And I either want to pay that for what I want to eat that day or I don't.
Yeah.
And then I pick it.
And remember, the financial product that you're asking about here has guaranteed cash flow going up income tax free for you. So this is about the only thing out there in the financial product world. I don't care about what the commission was. Because if commission taps into my ability to grow, like my 401k and my IRA, because if there's a 1% fee on that, 1% management, brokerage fees, account fees, and that comes out of my growth, then I should be a lot more concerned about my qualified plan than about life insurance, because life insurance gives you cash flow guarantees that rise income tax free. So you've got to remember, if you're going to compare things, try to do apples to apples. All right. Great questions, though, out there. The difference: do whole life policies have guideline level premiums to overfund them? Depends on the company. Got it. Okay. So premiums are level in whole life insurance. And what level means is that you can pay the same amount and they keep working for you and compounding. The cost does not rise. Universal life insurance, all of them, UL, IUL, VUL, EIUL, however you want to break it down, does not have level premiums. Okay. If you have a level premium, you might be in trouble because the cost keeps rising. So if the cost ever rises above your level premium, you can't have it anymore. You've got to pay more, or it's got to cannibalize itself. You got me? All right. The difference. You got that part? Life insurance from whole life insurance built like this, level premiums. You never have to pay more no matter how old or ugly you get. Okay, premium does not change. You have flexibility, but the cost does not change. Big difference. So if you pay more, overfund this bad boy, it grows better and faster. But you were not required to, because the premium cost never changed. Okay, hopefully that's helpful to you. Say yes out there if you understood that one. We're getting a specific line of questions today. It's always great to answer what you want to talk about. Thursdays, 3:30 p.m. Eastern, Ask Me Anythings. But it is kind of a weird line of questions today. All right.
It's a good mix. I see one that's asking about what's the lowest, it's two-part, what's the lowest premium? And then the second question is, and initial investment. So two answers, I guess, first, right? Let me actually start with the last one. So we're not talking about investing. There's no element of investing here. We're talking about banking. We're talking about how you could save and spend your money at the same time. Not taking risk. We're not talking about risk. We're not talking about investing. So we're talking about banking. We're talking about saving your money and spending somebody else's in this whole life insurance policy, right? So no risk. So no investment. Just to make a clarification there, right? Now, if you want to use this system, the cash values from the save and spend system, if you want to access some of that to go out and do risky things in the marketplace, then you can do that. Of course, this is your private asset. This is your private entity. You can use cash value for the things that you want to go out and do in the investment world. But this in and of itself is not an investment. So just a clarification there.
Hopefully that's helpful. Michelle, if I'm saying it right, am I saying it right? You're going to have to help me out because I can't hear you. Am I saying it Michelle correctly? Michelle? I'm certified in all that you sell. It's sell, S-E-L-L. Are you recruiting? We don't recruit, but we do like to talk to the right people. So if you're interested in potentially joining our team on some level, we only work with people as coaches who do this. Okay? So if you're doing this, that's step one. You might got a shot with us. We don't recruit. We are a boutique shop. If you want to talk about that boutique environment and what we do, DM us, okay? Or just watch the video first. If you haven't seen it, if you're not doing it, you got to start there. That's what we're going to start talking about first. And yeah, let's have that conversation. Okay, cool. All right. I guess I said it right. How much is the policy? User 441, it's kind of hard to read, says, how much is the policy, Jesse?
It depends. It would be yours. So what do you want it to be? I mean, that's not me trying to sidestep. The issue is everybody's different. Like I have a certain premium on one of my policies, let's say, but my 10-year-old son has a different premium because he's a 10-year-old. right?
Yeah.
So we just treat everybody as an individual. We custom build these policies, so you would end up having a conversation with us about what you think is appropriate, and we'll just ask good questions about your cash flows and your plans and your aspirations and your goals and how you plan on using the policy so that we can build it in a way to facilitate what it is that you already want to do, and then you should consider funding it at that level.
Also, let me get more specific. I'll answer the same question in a different way about policies that I actually have. I love doing this with Jesse because we can answer questions in multiple ways. Since we don't always get your verbal feedback unless you're on like the Zoom, like Bridget, what's up? Sometimes it's helpful to hear it in a different environment or light. I have a policy that I paid, my first one that I got 9 years ago, last month, $10,000 a year in premium. That's what I chose. I picked the number. Jesse didn't force me to do that. I decided that's what I was going to pay. So that's the cost. People ask sometimes, hey, what are the fees? The premium. I put the premium in, but the premium works for me. It gets more efficient all the time. So that's my number, but I also have a 10-year-old daughter. I don't put that number in on her policy. She's got one. I've got two now. My wife's got two. Kids got one each. Premiums are different. Premiums are different, whatever I picked. It's my deposit into my banking system. It's level, and I can pick it. You can too. You pick yours. Appreciate the follows. Can I get a few more shares down here? If you like what you're learning or you're loving what we're all about, helping people save and spend money at the same time, give me a share right about there on your phone or tablet.
If you don't
Appreciate
care.
the share. If you don't care, put your hands in the air. Bridget, how am I doing? Bridget's liking it a little bit. Bridget, ask us a new question. We'll tell you no lies. We'll tell you no lies. Where are you learning? Where are you in your learning process right now? Give us a question there.
Have you watched our video presentation? Have you read the book? What you been doing?
I have read a book,
Okay.
The
Which one?
Infinite Bankers by Marvin Mitchell.
Infinite Bankers by
That
Marvin
was
Mitchell.
how I first
I don't
found
know
out
that
about
one.
all of this.
Okay.
Okay.
What you say there?
Marvin Mitchell, Infinite Bankers. So you read that book. Have you seen our video presentation?
No, I haven't.
Okay. Well, that's on all of our websites, links in the bio, everything, everywhere. We might even be able to text you something here to the chat.
I'll put Jesse's. I'll put the video.
That's what I would suggest, Miss Bridget, is I saw a presentation back in 2015. Okay, and we've got a 55-minute presentation that's a real nuts and bolts introduction to this concept. And
Okay.
I'd actually like to find this book that you referenced, and then I would suggest next steps. Of course, you can jump in my calendar. We'll have a conversation. But as far as material goes, is going to this book. It's real thin, you can see, real short read, but it's called Becoming Your Own Banker by R. Nelson Nash. And this is also on our website. You'll be able to see. But awesome. Okay, so you're
Okay.
learning. You're in your learning mode.
Pump this dang thing one more time.
Right.
Coach Liz, appreciate the share out there. The difference aren't there fees to borrow against whole life. Nope, this is equity. Cash value is equity, no fees, okay? It is borrowing, so there's interest involved. While you continue to earn interest, we now have a running clock on the simple interest that is coming out, right? We build you a model to show you how that works in the calculator examples of our video. So watch that video. Jesse, if you don't look up and fix that dang thing, my goodness. You gonna bump it? You gonna fix it?
I'm messing up the technology, Bridget. You're making Bridget laugh at me.
I like to be playful on here. Jesse knows that. And I don't want to bore you guys out. Where's your video presentation? Como, go ahead and click right up here, okay? The Banking Bros. Click our regular logo, avatar, circle thing twice, I think. You'll have to get off of the live. There's no link on this page, okay? So you click over to our regular TikTok page, which looks like this, the profile. You can still hear me talking, actually, if you click onto this page. And then the link is in the middle, okay? The link is in the middle. Click that link, saveandspendsystem.com. And you can watch the presentation, and you'll end up being on our calendar very soon. Pick a time. We'll call you. Okay? Bridget, we're still here. Sorry. Hopefully you can still hear us at least. That's us.
There we go.
I can.
We were.
It's just-
You touched it last, actually. I'm not
the
even.
only one who fixed it.
I'm not even-
You guys
I'm not
for
even
10
touching the
minutes and
desk.
Nothing fixed. Okay. Michelle, plus you have the option to let your cash value pay your premium. You can't make a payment. You got more than that one option, but you are correct. We don't like to use that option because we want to put every dollar we got inside an environment that's going to grow forever and cash flow, income tax free. But you are correct.
It's a good plan for those passive income years of life.
Yeah. It can be a part of your system. User 441 came back with another question. Got it. Is there a lowest premium amount you can pay into a policy? Yes, actually. Okay. We don't suggest it because we're building a banking system, and I like to get deposits. Right now, I have a bank account at Wells Fargo. I like deposits. If people ask me what's the minimum amount I can put inside your bank account, if you work for me, J-Do, I'm like, well, I don't want to work for you. I don't want the minimum amount you can put in. I'd like a lot. You feel me? You feel me? But the minimum threshold is going to be about 10 times the age of the person. Monthly, that's the minimum. I'm 40. I know y'all didn't think I was 40. Bridget, if you don't let Linus in, Jesse cannot. I don't know with Jesse sometimes. Okay, $400 a month. I'm 40 years old. That's the minimum threshold on my body. If I turn 50 one day, but I started a policy at $400 a month, 40, it doesn't go up. It doesn't change, but the minimum threshold is about that as an adult. Does that make sense? Linus in the building. Let's go.
You look better than the last time I saw you.
That's
By that, I mean that beard looks good.
These dudes out here, Jesse and Linus, are both coming straight off the farm, the tractor. Well, I don't even know if they have tractors. Ask Linus if they can do tractors. I don't know. I'm sure he can. I'm making fun of him. Mennonite. He's a Mennonite. He was a Mennonite. Okay. All right. Plus, you have the option to let. Oh, hold on. Let me. You probably got some more comments here. Linus is a good dude. Linus is a good dude. Sorry, Linus, we're having a in and out connection problem here. Hopefully you can still hear us even if we blink visually. Okay. O-Dog.
Man.
I didn't see the question. Everybody tag O-Dog or at Brian right now because they probably think this Zoom is about them. Don't they? Don't they? There's one of me, 55 of you. There's YouTube, Alfonso out there. There's a couple people on Zoom. We got you. Why do people like Dave Ramsey hate this? Dave Ramsey's not talking about banking. This is a long explanation in reality. Okay, it's a long explanation in reality. I'll do it the best I can short. Dave Ramsey is talking about life insurance and investing. He's not talking about banking. We're the banking bros. We're talking about banking, so there's a different thing happening than Dave Ramsey wants you to think about. He wants you to think about getting out of debt, consumer debt, and those problems around paying interest out the window to third parties. Mm-hmm. I like that. I like that. But where's the money coming from? That's all I'm asking. Where's the money coming from when you pay your debts and bills? You work hard, I work hard. Me and Dave Ramsey ain't got no problem there, no difference. Okay? But when I pay off my debt in Dave Ramsey's plan and I pay my bills, I use cash, which means I go to zero every time. I use my money, I save it up, stack it. If they hate, then let them hate and watch the money pile up. Where's that from?
No idea.
All right, we trying out here. Okay, the Mennonite didn't laugh either. Maybe Bridget's laughing, but not. Okay, we're talking about if you decide to finance or use money or borrow against or take loans from your life insurance policy, you don't go back to zero because the dollars you put inside are still compounding. We're not talking about an investment. So do not let Dave Ramsey get it twisted for you what I'm talking about. I'm not talking about an investment. I'm not talking about something that could ever go down or backward. I'm talking about where'd you get the money from to do your bidding in the marketplace. I get my money from cash values, ever increasing tax-free, liquid dollars from life insurance policies to go get out of debt, if that's what I'm trying to do. It'll take you a minute to put your head around that because Dave Ramsey likes to say universal style statements like if you sell whole life insurance, you're bad.
Yeah. Let me use a question from Alvin on YouTube to tag into that one. Let's say somebody is paying off debt with their policy, and that frees up part of their cash flows now, right? So to answer Alvin's question, which is when you're paying extra, meaning into the policy, is that considered premium on top of regular premium? Great. So when you're using your policy to pay off debt and to recapture, you're exactly right, Alvin. That extra is going to be additional premium to what we build onto the policy, which is a paid up additions rider. That's where you can add in extra cash when you want above and beyond the regular scheduled ongoing premiums, right? So if you paid off a credit card using your policy, well, that cash flow that used to go to the credit card people plus the interest is now freed up, and that could be an extra payment back in on top of your regular scheduled ongoing premiums. I hope that was helpful. That's a great question. I've actually done that. When my wife and I got started, we had student loans, car note, credit cards, the works, right? Tens of thousands of dollars of debt. And we used our first policy to begin tackling that debt and paying it off, but not just paying it off, but recapturing those interest dollars. And when we freed up cash flows from that debt snowball using the policy, while we were, still compounding our premium dollars, like in cup number 1 here, then that extra was additional premium. Great question. Great point. Let me know if that was helpful.
Thank you, Jesse. Hopefully you guys are learning something out there. Thank you, Alvin, on YouTube. Remember, if you want to follow along with our YouTube journey, we've got podcast episodes and the video versions on our YouTube channel. We have got all sorts of myths and money things. Jesse even has some on some of his channel. He's got a proprietary channel as well. It's one of our coaches around here. You're welcome, Alvin. Watch this. I wonder if it shows up on anybody's screen.
How about that?
I don't know if it does.
Just for us or them?
Yeah.
We got bubbles. No, balloons.
Balloons. How
popping
many of you
up
can
when
do
you
this
give.
on your phone now and
Okay, I
thumbs
have no
up
idea.
and stuff like that? Okay. All right, Brian, you got it? Becoming your own creditor. That is correct. The only person I owe my money to is me, my family. And when you do that, you are in control of the banking function in your life, and it changes where the money is headed. Banks make lots of money because they are collecting everyone's interest. Banks don't buy cars. They don't buy houses. They don't buy stuff with credit cards. They give them out, and the interest comes back to them. If you are in control of recapturing the interest, you win.
You know what banks do buy? Is what jumped. Oh, life insurance.
Oh, yes.
I'm just saying.
All right, tell us about that,
That's what
Jesse.
jumped into my mind.
Tell us,
I
tell
don't
us.
know how Brian meant that comment. He might have meant that. I don't know in what kind of way, right? But could you be your own creditor? Yeah. Well, who else would I like to be in control of the banking function in my life, right? But the average person is using commercial banks, right? Even if they're paying cash, that's where they keep their cash, is in a bank often enough. And the folks that are using debt, they're using money from the banks. So let's take a look at what banks are doing, because aren't they nice buildings in nice parts of town, and their branches are all over the place? Okay, so maybe they've got some things figured out, right? Well, the biggest asset that commercial banks buy is life insurance, whole life insurance. It's called bank-owned life insurance, BOLI. So if we want to learn a lesson from these nice buildings in the nicest parts of town, I would say we consider who really is the creditor in life, or who is, controlling the banking function.
Love it. What other questions do you have for us, ladies and gentlemen? We're starting to wane on some of the action.
Learning about
That's because we answered everything, I'm sure. So we might wrap things up in a few minutes. Did we lose
become your own bank.
Yeah, Paul, ask me that question again, Miss Bridges. I'm sorry, I missed the first part of it.
That's okay. I was talking to my husband.
Oh, tell him. You tell him. You're learning about becoming your own banker. Bridget's talking to her.
And that's what I told him.
Her husband, what are you doing on the phone? She said, I'm learning about becoming your own banker.
There you go. Very
Show
good.
him the video, Miss Bridget. Y'all watch that together, and then jump in my calendar. Let me know what questions you come up with. Love to talk with you.
I'm going to do that.
Mark says from TikTok, so as an individual, can I buy a BOLI? Can I buy a bank-owned life insurance design policy? Okay.
I guess you'd have to go out and
become a bank, literally. So if you inflate
10 years of your life and millions of dollars.
Yeah. Mark, a bank is not a person. A bank that you're talking about is a place or maybe a system. So you can buy a policy designed like them, because that's what we do. Yes, 100%. Banks actually don't particularly design them for cash value. We're going to design yours so there's actually cash to be able to be utilized for financing and purchasing things and getting out of debt from the jump. That's what we're going to build. Okay, banks own life insurance because it's a guaranteed pool of money that does grow liquidity, but banks don't often at all set them up for early cash value. We're going to set yours up so you can use money from it early in the game. Great question. We'd love to help you. User 441, back in the game. Do you have a YouTube video or website to refer to this? How do I get started? 1,000%. So click the link in the bio, user 441.
Linus has jokes in the comments. You read that.
What do banks buy? Dumb sucker. Right. They got suckers on the counter because they got you. I love that. I love that joke. It's not even a joke. It's true.
It's funny, though.
Linus knows.
Funny.
Okay, so if you go to our regular profile, okay, click the link, go to our regular profile, the link right here in the middle, it's called the Save and Spend system. There it goes. It'll take you to our video. Got it, user 441? So watch that. Drop us your email address. Pick a time we can call you and watch the video. We'll call you and you can ask us questions about the video and help you understand how to get started.
Go back to the topic of commissions real quick and banks and what they're doing and everything. Think about that. Those little doggy treats that they try to give to our dogs. Those suckers on the counter. Who pays for that? But that's my point. You said, who pays for that?
I haven't been in a bank.
We pay for that.
Nah. Yeah,
we're about becoming our own banker here, man. I'm just saying.
I go through the drive-thru.
I know they do that.
Go to the drive-thru at the bank.
Do you ever
in the bank?
But
been a while.
The doggy treats, man.
I don't have. I never look down. I don't have a dog. Okay, you're welcome. You're welcome, user 441. We'll be talking soon. Tell us what your name is. What's your first name? We'll look for you, and I'll put you on Jesse's calendar for sure. What would? Right. Reminder. Okay, how soon do you have to pay back the cash value? You don't have to pay back the cash value. Good question, because cash value is equity of your death benefit. Gross benefit for later death, net for now. Cash value is how much of that death benefit you could get to. It's not a separate pool. It's a separate pool from your money, but cash value is how much equity you have in the big pool, death benefit. So if you use it and don't pay it back, your family gets the rest. You do not have to pay it back. Good question. We'll talk you through that, and you'll learn more as you watch the vid. What's a good company to go with, Jesse?
It depends. We have a conversation where we talk about, what state you're from, for example. We might go with a particular company, but we're not married to any one company, so we could use the company that's best for you, that's appropriate for you. State, people are now starting to say, what state that they're in. So that's just one of the variables, one of the factors that we would look at.
It will help you all over the U.S., by the way. If you're in Canada, we've got some partners and friends up there. You can DM me if you're in Canada. Everybody else, just click the link in the bio, but we'll send you to some great partners and friends who do this above the border. Justin Trudeau, Uncle Joe. We got you in all 50 states down here, okay? Puerto Rico, we've got some clients in the U.S. Virgin Islands.
Love it.
Yep, right now going through underwriting, the process where we get the paperwork done and get their numbers on paper for us, guarantees in the Virgin Islands even. You're welcome.
We got to ask what we think about a particular company, and it's not a mutual life insurance company that we use. They've got an interesting business model.
Who's asking? Where?
That's somebody on TikTok. Yeah. Scroll up 2 or 3 comments. You'll see it. Somebody's asking about a particular company.
Okay, so that company is not a company that we partner with for mutual insurance policies. We don't. Great question, though. LA Football Club, how much do I have to pay in premiums to borrow $5,000?
More than $5,000?
But remember, that $5,000 is going to keep going up. Is that today? Is that tomorrow? Is that the first day? Is that the next day? Remember, the cash value rises, never stops for your whole life. So your money system and your fluidity is rising. There's always transactions going on. So watch the video and you can use the ratios. When we put dollars in, it's going to buy us big death benefits, and we're going to cash flow a certain amount immediately, but it'll get bigger next month. It always goes up. Got it? What's the answer to the dollar amount? Okay, you still with me, though? I know you were typing this while I was answering your question, but I've realized on TikTok, nobody's listening while they're typing questions. You pick premium. All of those dollars will compound and grow, and I'll get specific for you since you asked. It'll buy a big death benefit, and the amount, you ready? LA Football Club, the amount that's immediately available in normal customization scenarios. That's an oxymoron. Normal customization scenarios. That you'll see in the video. The amount that's immediately available, day one, I'm not talking about if it grew any and you had it in there for a while. Day one is about half of that number. Boom, you got your answer. Day one, immediately, first 30 days, the amount that is here from this pool is about equivalent to, at least normally, half of this number, the one you chose to put in. That's day one. How about them apples? Does that make sense?
It
Helpful?
does. There's so much more that can go into that, though.
It's so
and
much.
that's
I
why
said
our
normal
consultation. Yeah.
customization, we're
I'm just
trying.
reemphasizing that's why the consultation calls are so important.
Yeah.
So we can have a more holistic look at your financial footprint, so that you can have a custom built policy. But yeah, that's
We can customize
the rule
it
of
to
thumb
be
right
different.
there.
But you're going to see that type of scenario in the video. That's what we built for you. It's a pretty standard way to think about infinite banking setup. Okay, ladies and gentlemen, I think we're done. I think we're out. Mom's going to come get me, pick me up. I'm done. Now, Bridget, thanks for joining. Watch that video. I put them in the links in the chat. Did you click them?
Let your
The
husband
video
see
is
that.
there. And then click right
Okay.
now on Jesse's calendar. So save it in another tab on your phone so you and Jesse can keep the conversation going. Appreciate you guys out there
Thank
in
you.
TikTok.
I'll
land.
look
Go
for
ahead
you.
and follow
Bridget
the
from
Banking
Ohio.
Bros.
Looking
All
forward to
right.
talking
Follow
with
the
you.
Banking
Hope you
Bros.
have a good day.
Cash Compound.
You
We're helping
too.
people save and spend money at the exact same time. Lynn, it's good to see you, my friend. Been too long.
My bearded brother.
Look at these guys out here. I'm
Get us some
clean.
more policies
They got beards.
through there.
All right. The Lord's beards. Okay. Peace.